Imagine waking up to discover that global currencies have shifted overnight. Banks are quietly recalibrating their internal systems, and exchange screens across major financial hubs are flickering with unusual rate activity. This is not a random glitch, this is a signal. And before we go any further, hit the like button, subscribe, and stay connected because what you're about to hear might be the most important update you receive this year. As financial analysts scramble to interpret the sudden movements circulating through international banking networks, one thing is becoming increasingly clear. The discussions around the Iraqi Dinar and Vietnamese Dong have entered a new phase where speculative chatter has begun colliding with legitimate institutional adjustments. Now, while no official authority has declared a revaluation event, the momentum in digital settlement platforms and the unusual timing of backend maintenance cycles inside several major banks have caught the attention of investors who have monitored these currencies for years. What's happening right now is not just hype, but a series of observable indicators: market liquidity fluctuations, updated compliance modules, tightened verification processes, and synchronized system refreshes across multiple regional banking clusters. When such patterns emerge simultaneously, they raise questions about whether financial institutions are preparing for new rate structures, currency alignment strategies, or adjustments tied to broader global policy reforms. Meanwhile, the symbolism of a bank reboot reflects a broader trend: the transition toward more transparent, digitized, and internationally integrated currencies. Iraq has been steadily modernizing its financial architecture, increasing transparency in cash flows, improving monitoring for foreign transactions, and working with global bodies to stabilize its economic outlook. As these reforms progress, conversations about a stronger dinar naturally intensify, not because an overnight rate jump is guaranteed, but because long-term structural improvements create the foundation for currency strengthening. Similarly, the Vietnamese Dong has shown resilience as Vietnam continues developing its manufacturing capacity, export performance, and foreign investment appeal. Both nations aim to enhance economic stability, reduce dependency on external currency pressures, and participate more actively in digital banking modernization. What we're witnessing in real time is not just rumor, but the intersection of economic reform, banking modernization, and increased global scrutiny. Whether you're holding dinar, dong, or simply watching the markets, staying informed is essential because rapid shifts can occur without warning. The key is understanding that global currency movements emerge from policy changes, trade balance improvements, investment trends, and international negotiations, not sudden magic. And before we continue, make sure you watch till the end, because the deeper insights coming next could completely reshape the way you understand this track unusual banking maintenance windows and currency server resets across multiple regions. A fascinating pattern emerges. Institutions rarely perform synchronized updates unless preparing for regulatory deadlines, auditing cycles, or system recalibrations tied to global policy alignment. So before we go deeper into the potential triggers behind this wave of attention, tap the like button and share this video so more viewers can stay alert to what's happening behind the scenes. The chatter about a rate flip for the dinar and dong has surged because investors have noticed heightened activity inside currency clearing pipelines, a phenomenon that typically appears during periods of system testing, compliance restructuring, or digital integration upgrades. But here's the important part. None of this confirms a sudden or dramatic rate change. Instead, it signals that financial networks are shifting toward updated frameworks that allow smoother handling of international transfers. Iraq has been strengthening its monetary policy tools, increasing foreign reserve stability, enhancing banking oversight, and working more closely with global partners to reduce transactional bottlenecks and improve anti-corruption measures. These steps are crucial because a currency cannot become stronger or more globally competitive without a trustworthy financial environment. On the other side, Vietnam has focused on industrial expansion, export diversification, and tighter monetary controls, allowing the dong to maintain a relatively stable trajectory despite global pressure. The current wave of speculation stems from the visual synchronization of banking activity, digital dashboards resetting, currency feeds updating, and cross-border transaction filters recalibrating. which is something seasoned traders pay close attention to because system-wide updates often precede real-world policy changes. For example, exchange platforms may test new rate distribution channels long before any official rate adjustment occurs, simply to ensure stability and avoid disruptions. This testing phase can be misinterpreted as proof of imminent revaluation, but in reality, it is part of broader operational protocols. What matters to informed observers is not whether a sudden RV event is instantly triggered, but whether the economic indicators are trending toward long-term strengthening. Iraq's moves toward greater fiscal discipline, reduced dependence on cash-based transactions, and International Monetary Fund aligned monitoring frameworks all point to a more stable monetary environment. Vietnam's commitment to industrial growth and enhanced foreign investment channels similarly positions its currency for gradual strengthening rather than an abrupt shift. The banking reboot conversations highlight an important truth. Global finance is transitioning toward digitization, transparency, and enhanced interoperability. These transformations create the stage for currencies to evolve, but they do so through steady reforms, not dramatic overnight shifts. Still, the unusual activity reported by investors underscores that something structural is indeed taking place, and understanding these signals is essential for anyone following the dinar or dong trends. Stay with us until the final paragraph, because what comes next will help you see the broader economic recalibrations and background rate checks. Made you think something big is happening beneath the surface? Your instincts aren't wrong. So before we dive into the last and most critical part of this analysis, hit like, comment your thoughts, and make sure you subscribe, because the deeper we go, the more your understanding of global currency mechanics evolves. The most important takeaway is that real currency movement is driven by economic reform, structural modernization, and stable governance, not viral speculation. Iraq's currency trajectory will be shaped by how effectively the nation improves banking transparency, enhances foreign exchange monitoring, grows non-oil revenue streams, and builds long-term economic resilience. All these elements are currently in motion, which is why analysts observe every change in banking systems with heightened attention. When a country strengthens compliance systems, integrates digital reporting standards, and aligns more closely with global financial protocols, its currency gains credibility. That credibility can translate into gradual strengthening, increased foreign investment attractiveness, and market confidence. But none of this guarantees a dramatic revaluation event. Instead, it paints the picture of a nation attempting to stabilize its currency for sustainable growth. Vietnam, similarly, continues expanding its industrial reach and export power, making the dong a stable and closely monitored currency. The global banking reboot seen today is part of a much larger trend. Nations upgrading their financial architecture, adopting new digital standards, and connecting more deeply to international settlement networks. When such upgrades occur simultaneously, they attract speculation, especially in communities tracking the dinar and dong. What investors need to understand is the distinction between structural preparation and immediate rate adjustments. System updates are necessary steps, but not confirmations. Even so, these shifts often signal that governments and banks are preparing for long-term policy adaptations that could influence currency behavior in the future. Being informed, patient, and realistic is the key to navigating these changes. While the excitement surrounding potential rate flips is understandable, the real story lies in economic modernization and global integration, which gradually position currencies towards stronger international standing. For viewers following this journey, staying educated and aware of economic signals is more valuable than waiting for sudden transformations. And before we close, here is your final call to action. If you want continuous updates, deeper explanations, and daily alerts about currency movements, financial reforms, and global economic trends, make sure you subscribe right now. Turn on all notifications, drop a comment, and share this video with everyone who needs real research-based insights rather than rumors. Your knowledge is your power.